Welcome to the Alhambra Investments Weekly Pulse. This week we're going to talk about a question a lot of people are asking. Will there be a business boom from pent-up demand when COVID is finally over? Joe Calhoun, what do you think?
Well, as I said in the piece this week, I was just making it a personal anecdote, and the old saying about anecdote not being data. I get that, but a lot of economics is about human behavior. So it's interesting to me. My wife and I, on April 15th, we hit our 2 week anniversary of the second shot, which means, as everybody's pointing towards that 2 week period, and going, okay, I got my second shot. I waited my 2 weeks, and I'm going to go do some things. And so that was on a Thursday. Well, we ate out to dinner Thursday night, Friday night, Saturday night, and actually went out Sunday afternoon and got a beer and a burger. So, we had some pent up demand, I guess is a good way to put it. And we, tried our best to do it all at once. I also joined the gym again, which I haven't been in the gym in over a year. So that was very nice for me. It's something I love to do. And so getting back to the gym was very important to me. What's interesting to me, though, is that once we got that out of our system, that one big weekend, my wife and I were talking, and we were like, well, I think we just need to go back to doing what we used to do, which was we'd go out to dinner once a week. We had our night out was usually Friday or Saturday night, and we would go out once a week. And the rest of the time we eat at home. I mean, we enjoy cooking and so forth. So, but the point is that we kind of got our pent up demand out of the way in one weekend. Now, there'll be some other things that happen. We're going to take some short trips, but we're not going to be traveling to Europe this year, which we have in the past. We try to take a big international trip once a year, but we're not going to do that this year. We're thinking maybe next year. But the point is, I'm not sure how much of this boom that everybody's expecting is. Look, I put it this way: there's going to be some pent up demand that gets satisfied. My question is, how quickly does it get satisfied? My guess is it's going to be pretty quick. I mean, maybe we're not typical, but I don't think we're that odd. Uh, we're maybe a little different, but I don't think we're that different. So I suspect that you're going to get this surge in activity as people come out of get fully vaccinated. I don't think it's going to last all that long. It's going to be interesting to see how it unfolds. I try not to make any predictions and just take things as they come. But if my experience is typical, then I don't think this lasts all that long. Maybe that's what the bond market's trying to tell us.
Well, let's look at some of the market indicators. You mentioned bonds. What's the bond market saying compared to public perception?
Well, there is a lot of press and talk in the business anyway in this industry about inflation and so forth. There's obviously all this kind of built into stock prices for sure. This idea of a boom in the post-virus period, but the bond market is saying, not so much. The bond yields hit about 1.75 in the 10-year a few weeks ago, back at the beginning of, or I guess it was back in March. We're down to 157 today. No, that just says that, and actually inflation expectations have come down over the last month. So, in some sense, the bond market is being very sober here and saying, maybe there's not any kind of big boom after this thing, or that maybe whatever boom you get doesn't last. I'm not sure exactly what that means. But I would say too, we shouldn't get too caught up in these short-term movements. The fact that we moved from 1.75 down to 1.57 really doesn't mean all that much in the big picture. The trend in rates is up. That started last August. It's been pretty obvious. Maybe bonds sold off a little too much. Maybe they got ahead of themselves. Maybe you had to pull back in yields a little bit. Right now, the trend is still higher, but more recently, it has been, showing some weakness. Does that mean anything? I don't know. We'll see what happens. We'll see if we resume the uptrend in rates. I think there's some indications that might happen, but we'll see what happens.
What about the dollar? We've had some weakening, at least a little bit over the last couple of weeks.
I think the dollar kind of confirms what the bond market's been saying. I mean, you're looking at the dollar versus a bunch of other currencies when you're looking at the dollar index. So really, we're talking about relative growth rates here, or relative growth expectations, actually, is a better way to look at it. So maybe, the U.S. has pulled back some. Maybe the rest of the world has picked up some. We've seen a little bit of a rise in the Chinese yuan recently, and some of the emerging market currencies look like they're making some kind of bottom here, the Brazilian real in particular. And the euro, I mean, we've seen some strength out of the euro recently, and the economic data in Europe has been better, no doubt about it. So, just a shift in relative expectations, I think, about growth. Maybe the U.S. is not as big a boom as everybody was maybe thinking, and maybe the rest of the world's going to catch up a little bit. Um, it's going to be very interesting to see what happens to the dollar here because we're right at the bottom of that range we've been in now for 6 years. If you break out of the bottom of that range, I think you got to shift your viewpoint a little bit and say, look, we're more in a long-term downtrend now. Uh, but until it breaks out of that range, you just got to say it's neutral. I just don't see any big movements that should happen in either direction. There's nothing in the futures market, no big imbalances there. So, the dollar has followed bonds, I guess is a good way to put it.
I know one of the other things you watch is the copper to gold ratio. Is that saying anything different?
Yeah, of course. It's basically the opposite. Copper to gold ratio actually usually leads bond yields. It is a great indicator for bond yields. It's coincident to leading a little bit. Uh, Copper to gold ratio actually peaked a month before interest rates did. And you've had this correction, but it's not been like it fell off a cliff or something. It's not like the copper to gold ratio went down a lot. It kind of consolidated in a sideways fashion, more of what a technician would call a consolidation in time rather than price. And now it looks like it's turning higher. Copper had a good week last week. The copper to gold ratio itself was up 4% last week. So when copper is outperforming gold, that's an indication that growth expectations are rising. So you've got one market, the bond market, saying, maybe things are not so great, and then the copper to gold ratio is saying that things are continuing to get better. That's the contradictions we see in markets, and this is frequent. We see this all the time. If there's no consensus about what the future holds, then you're going to see some markets pointing in one direction and others pointing in a different direction. You got to wait for more confirmation across markets to feel comfortable about making changes to your portfolio.
Joe, as Americans, we have a pretty short memory, and a lot of people have forgotten that even before the pandemic, the economy wasn't doing all that well.
Yeah, it is quite interesting to me, this idea of a boom, especially the people who seem to be thinking of the idea that there's going to be some kind of sustainable boom. The economy was not that good when we came into this. Economic growth in 2019 was 2.2%. GDP growth from 2010 to 2019 averaged 2.3 a year. So those are okay numbers. They're not terrible, but they're not great either. And considering population growth, which we've talked about many times, population growth and productivity growth, that's about all you're going to get. So the question then becomes, did we do something from a policy standpoint in the last year, or was there something from the virus that's going to change that trajectory? And I don't really see it. I mean, there's going to be interesting things that come out of the virus. There's going to be innovations that come out of this. Companies had to get more efficient. There's lots of things that could change. But are there any of them going to be big enough to move us off of that growth path? I don't know. That's something I can't answer, but my guess is probably not. Um, and actually, the way I look at it is we came into this growing at 2.2%. We just added a whole bunch of debt. It seems logical to me that we actually come out the other side growing less, not more. So to me, the idea that you're going to get some kind of surge in activity that then fades away fairly quickly, I think that's probably right. But again, maybe I'm missing something. I don't like to prejudge these things. We'll see how it goes. We get to the other side of this thing, everybody's vaccinated. We'll see how the activity in the economy continues to change.
All right, thanks, Joe. And if you'd like to read the entire Pulse report for this week, we've included the link below.